Hi everyone, this is Eric from Traders Helping Traders with this weekend's Tricks of the Trade. You know, professional traders have an expression that a failed signal is often the best signal. And what that means is when the market gives you a signal, whether to buy or to sell, and that signal fails, it's to our advantage to take the signal in the opposite direction. Now, this is usually easier said than done, because oftentimes a failed signal will be resulting in a loss for us, and therefore we have to come right back and take a position going the opposite direction from what we had intended. And that can be very difficult to do, especially if you've just taken a loss the day before, or if you're day trading, if you just took the loss a few minutes before. It can be very unnerving to turn around and put money on a trade going the opposite direction. And yet, that is oftentimes the safest trade to do because the market has shown you what it does not want to do. All right, so let's take a look at what that looks like in real life. Oh, and by the way, even though a failed signal is a very strong signal, as in all things trading related, it is not foolproof. There will be times when you will get whipsawed out of your original signal. You will take the failed signal and you will get whipsawed out of that as well. So you get back-to-back losses. And believe me, that's a little bit unnerving. If that does happen to you, let me suggest that you shut things down for a little bit. If you're day trading, it might be a good time to at least take an hour off and just gather yourself together. And if you're position trading, well, you may just want to ignore the market for a day and kind of let the dust settle so that you can see what you're doing, because obviously something is not behaving as it should. All right, so enough of that. Let's see what this looks like. This is the Australian dollar, the March contract. The market is in a strong downtrend. Our momentum is heading down. We have the market showing us resistance right here. This is our green-red combination. The market came down, showed us support right here. We have red-green. And then it came back the very next day with resistance again at green-red. So this would be our sell signal. The market showed us support followed by resistance. We're going to sell resistance with the trend and with the momentum and try to sell this market short. So we would set it up to sell it short, enter below the nearby support, stops above the highs, and we would probably pick a profit target somewhere down around here through this cluster of support. All right, so what happens the next day? The next day, the signal fails. Notice that if we had placed this trade a little bit tighter, we could actually be short this market right now, and in not a very good position actually. Obviously we could keep our stops relatively tight because these ranges are small, but the principle is the same. This market gave us a sell signal and it should have continued lower, but it did not. It continued marginally lower, just enough to trigger some orders down here, not really enough to break this support area, and then it ended up closing higher. Well, that's our failed signal right there. So what should we do with that? Well, we should look to do the opposite of what we were intending to do. We were looking to sell, so now we should look to buy. We're looking, because this sell signal failed, we're going to look to buy the market on a move higher. Let's see what happens the next day. Wow, look at that. This is usually a move that gets stretched out for 3 or 4 days, but the Aussie dollar made a huge move in just a single session. In fact, just for kicks, let's see how high that went. Look at that. That was over a $6,000 day. That one move. Now, granted, we wouldn't have caught all of that, but still, the point is you can get some pretty substantial moves out of trading these failed signals. And they're not always huge single day spikes like this. Oftentimes it will take 3 or 4 or 5 days to mature, but the fact remains that we saw it coming. The market failed to follow through on the sell signal, came back again with support, and that was our failure right there. So you can see that a failed signal is indeed oftentimes the best signal. And that's this week's